Insanely bearish market out there nowadays. Markets for Q1 so far down over 12% in the S&P 500. D7 here with Grok Trade, and looking at the S&P 500 SPX. SPX is what we're looking at here. This is a monthly chart going up, 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 up. And this is the 10-year bull run that we've had. Like if I were to shrink this up and really show this to you, this was 2008. We had this drop. We get down here to 2009 where we bottom out, and that was on March, and we go up, 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 up. And since 2000, we get to break even 2013. That's the lost decade, meaning that you got your money back finally from 2000 and 2013. Then we go up 5 years. Then we go up 10 years, then we go up 11 years, 12 years. So we were very, very long in the tooth, meaning overbought. And we were very extended on the MACD, up, up, up. We had a bearish divergence, and then we dropped. We were calling that. If you go back to December, late December in those videos, like I said, chances are really good that we put in our top. So I called the top here. And I don't think we'll ever see a new time high anytime soon here in the markets, okay? So this top is in for some time, and I'm going to say for years. I want to share with you a couple things here. We have what's called a good, healthy bull pullback. That's a nice bull pullback. Very overextended on relative strength. So the RSI, we were way overbought. We're now dropping. So that's bearish that we're dropping on the MACD. Big histogram ticks to the downside, but we're still above the zero line, which is relatively bullish. So the thing I want to look at here is this drop is a 12% drop in the last 3 months, and we still got a few weeks left here in March. So it's been very bearish here. The drop that we had for the COVID drop was in the 20s. So let me see, what was that? If I were to take it right there, go down to where we opened, that was 23% drop. And then this was the drop that we received in 2018, which is around 15% drop, if I remember right, 15. Let me go here. And yeah, oh, we go down to the bottom right there. Yeah, 15 and a half. So we lost 15.5% there, in the 20s there, and we are at 12 already here, looking for more, okay? So the question is, what can we expect going into the future? What I'm looking at is we had some serious volume to the downside here. So we do have a tick higher on the volume, but I want to go over here and bring a Fibonacci into it and go to the extreme low on this Fibonacci, draw it up to the extreme high. And we're finding support at the 23.6, which is a good area for buyers to come in. So this would be a nice bull pullback. Nice bull pullback to the 23.6 Fibonacci retracement is where we're at here, which puts us right around 4,200 on the S&P 500. And that would be a great area to see it rally back higher. It needs to do that. That's something that it needs to do. The MACD needs to stay above the zero line, and we just need to rally here. However, if we don't rally soon, a 50% pullback is very healthy in the market. So look for us to get back to where we were back in 2020. So we'll give back everything that we have made in the last year and a half pretty easily. So it'd be a 50% haircut from where we were just in December. 50% drop. That means 50% of your portfolio gone, down here in the 50% level. And that's a chime from a hedge fund manager. So anyway, that dropping down here could happen, guys. It could get really slippery and drop. However, our only hope is, can we stay at the 23.6 Fibonacci level? Can this be a nice bull pullback and a rally higher? The answer is absolutely yes. So do I anticipate a pop relatively soon? I don't know. I need to go to lower time frames to see if we're seeing any hope there, which we're going to get to. But what I do know is we will get a pop at some point. The question is, will it happen now, this month or next month? When will it happen? When will we get this little pop? Because I think going into June, July, we're going to see a sizable drop to the downside. That's what I see in the markets. That's what I think is going to happen. But what we're going to do, so we're going to get this pop up, and then we're going to drop a pop up, and then a drop. But I don't know when the pop's going to happen. Will the pop happen now? Will it happen down here at the 38.2? Will it happen down here at the 50? I don't know. When will it pop? But when it pops, I don't think it will get to these highs again. I think these highs are set for many years to come, because we need a multi-year recessionary pullback, and it would be healthy for the markets, and because the $30 trillion deficit or debt that we have here in the United States, and the 7.9 inflation rate that's posted, right? I know everyone knows it's higher than that. We have serious consequences due to the over leveraging of the US dollar, and the fact that we have, because inflation will always take care of debt. That's what happens. Inflation, if we don't take care of our debt for us, inflation does it for us, right? And that's what we're experiencing, and I think it's going to get a lot worse than better here. But you need to know how to trade bearish. Remember, man, guys, for you guys that said be looking about going into cash way back here, and I hope you guys took heed to that going into cash, because if not, you're suffering at this moment. And if you're not in cash, hopefully you're short this market, which we've been pulling down some great profits on the short side. But if you're not short, hopefully at least you're in cash. And if you're not in cash, you're just buying and holding out. It's just a tough place to be, especially if there's a chance that this king could pull back to 50% or more. But what I want to do is take a look at higher time frames. So I'm going to go to the spiders, and let's go to our lower time frames rather. We're going to go to the weekly charts. This is the weekly charts here on the spiders. So the spiders, I had these two trend lines. If I go here to this, you'll see support. We broke that support. That's really no good. I'm very oversold on the RSI, very oversold here on the MACD. So this could rally pretty soon. And if it rallies and gets back above these trend lines, that we could get that snapback. But that snapback will not, in my opinion, will not make it back to these highs that we got back here in the last week of December. I think we'll get close. We can get to it, but or maybe not even get to it, and we'll come up and then drop. So this is a weekly chart, remember. So the diamonds weekly chart is very, 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 it looks like spider webs, right? But these trend lines matter. But if you go over here, we're very, very extended. We are so oversold right now. We're looking for a rubber band snapback, but we have a lot of trend lines that we gotta get above. Qs, the NASDAQ, way, way down, very, very oversold. Let me see. The last time we were oversold like that was the Corona crash. Corona crash was down there. This is big time area to be looking for buying opportunities on the weekly chart. I think the snapback's going to happen, but I think it'll be short-lived. It'll rally up, maybe hit our head right here to this area of resistance. We'll go down, 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 rally up, hit this nice bear pullback to this level, nice bear, and then that's a place to short, looking to the downside, looking for great opportunities to short this market. That'd be great. Russell's 2000 weekly chart is relatively more bullish than we're seeing the others. That's why I'm thinking there's hope. We're at this major support line. I think there's a chance we are going to rally higher, guys. And I on the weekly charts, it's really, I think we're going to get that snapback, and that's going to happen. Financials, if you look here, down, 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 really oversold here on the financials. We're above a trend line. We're pretty oversold. I mean, this would be a great place to see it rally back, and that'd be really good to see. Quick look here at the VIX. The VIX is up, 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 but look how people are selling. They're selling into it. People are selling into the VIX strength there. Look for the VIX to to pull back here a bit, get back below 25. I think that would be interesting. And then Bitcoin. Could be putting in a double bottom right here, W for winner or wow or wonderful, double bottom there. Look for upside opportunity for Bitcoin going into the near future. But the jury is still out on this one, because anytime it rallies up, people are selling into that Bitcoin. The bottom may not be set in place quite yet. So there it is. We have education. Feel free to let us train you. Happy to do so, but you guys have to figure out through the website on how to get trained by us. We'll let you figure that out yourself. But I'm here in my Tampa office. Let's see, you can see over here. You can see over here. And there you have it. If you like it, like it. Catch you guys later. Bye.